How do you respond to market pundits who maybe once read an NBER paper and say, a recession's coming? How do you respond to that?
I say hi, Tom and Lisa. On global recession, yes, I mean, we're getting that question a lot. Our April numbers for global growth was 3.6%. Now, at that level, that is a healthy number for the global economy. There are headwinds, absolutely. There are many downside risks. But I think to say that at this point, globally, for the global economy, that there is a recession, I think that's a bit premature. But that said, I think there are regions of the world that are getting hit quite hard, especially with the war more recently, and Europe is such a region where you could see countries there go into some technical recessions.
So here's the problem for a lot of people who are seeing a gloomier side of things. Snap came out this morning, the CEO last night actually, and said that the macroeconomic backdrop is deteriorating much faster than they had previously expected. This is similar to other things that we have seen out there, basically a surprise in the negativity. Does that draw your concern, particularly with the slowdown in China and how much that's bleeding over?
We certainly are getting news that, shows more weakening in the global economy. I think one big data point is what came out of China in April. That for the April numbers in terms of retail sales, that was significantly worse than we were expecting it to be. We're seeing interest rates going up in all the major economies, and it's changing quite rapidly about how much of an interest rate hike will happen and how quickly. So there are significant downside risks over here. And we have, by the way, always been flagging the fact that there would likely be stock market corrections, volatility in markets, and we're seeing that.
Are you counting on the Fed to pause in September with their rate hikes in order to achieve a more optimistic scenario?
Inflation in the U.S. is broad-based, so this is not all a supply story. There's an important demand component to it. I think it's very important for the Fed to rein in inflation as soon as possible. And even at the rates at which it's targeting right now, for some time, we're going to be in low real interest rate territories and negative real interest rates in many cases. So that's still, accommodative for the economy. So I do think they should not take the eye off the ball in terms of bringing in down inflation.
I need to link in the IMF's work, and I think people are surprised as they associate a food crisis with the World Bank or with the United Nations, and yet the IMF does prodigious work on this as well. Our Eric Martin makes clear he is studying Egypt, is, if you will, one of the test tubes of this horrific price change we're in terms of rice, in terms of wheat and such. India's led the way with the first fears of blockage of exports. What is the IMF doing to give confidence to nations that are struggling with wheat and, heaven forbid, I would say, rice?
Tom, this is a major concern for us. I mean, it's not just India, but if you look at food exports, since the start of the war, around 20 countries have put restrictions on food exports. It's be it wheat or be it palm oil and many other such products. And fertilizers also are in serious shortage. So we worry a lot about what's going to happen with food prices. I think it's one of those prices where there's probably more that's going to go up in the future than what we've already seen. And it is a major concern.
The history here is a domestic government will come to the rescue, flatten prices like the cost of bread in Egypt has been flat for decades, and subsidize whatever the commodity is until it breaks. How close in your study, country to country, are we to a breaking point of that domestic subsidy to feed people?
Look, after 2 years of the pandemic, governments around the world, especially in countries like Egypt, do not have the fiscal space to provide widespread support. And this is something that we are tracking very closely, exactly this question of how many countries are now facing these rapid increase in import prices and therefore are likely to have balance of payments problems. This is one of the trackers that we have. And this is a major concern.
How much is this a failing, frankly, of the developed world from supporting Ukraine more? In other words, from actually providing more financial aid in order to get some of those supplies to the rest of the world?
This is a very challenging issue about how to get Ukraine's supply out of Ukraine. The problem is the embargo on the Black Sea. I mean, you just cannot get the ships to take the wheat out. thinking of creative solutions in terms of putting them on trains and sending them out through that way, but that's going to take a lot more time. In addition to the war, we're also seeing the effects of climate change around the world, and one of the reasons why India has put its export restrictions on wheat is because of poor yields and bad weather. So that's another big negative. But we really do need to try very hard at this point to try and get supply up as much as possible around the world.
Given all of these pressures, how long will it be until we get inflation back to a level that is familiar pre-pandemic?
It varies depending upon the part of the world you're speaking about. But for instance, if you talk about the US, our projections in April had inflation staying above 2% well into 2024. This is core PCE inflation. So it is coming down. With all the interest rate increases that are projected, inflation is expected to decline. But I think the bigger headline is the fact that it remains well above the target for quite a while.
I want to get out front of this wonderful panel I'm doing tomorrow with you. Mariana Mazzucato will join us as well, among other worthies. Growth economics is taken for granted until you take a course in growth economics and you realize what Robert Solow did in 1957 borders on religion. We take for granted growth. My experience is the IMF does not. What do we need to do to sustain growth, given 3 once-in-a-lifetime events: global financial crisis, medical pandemic, and now a war in Ukraine? You don't take it for granted. How do we sustain growth?
I think a fact that not many people are aware of is that post the pandemic, while we have advanced economies pretty much returning to pre-pandemic trend, which is where they would have been in the absence of the pandemic. That was the projection, which is likely to happen in 2023, 24. We have many emerging and developing economies that have large amounts of scarring. So for that income group, they have GDP, which is about 5% below what they would have had in the absence of the pandemic. And this divergence is something that we pay very close attention to. Of course, they had much less fiscal wherewithal to provide the kind of support that was provided in the advanced world. Vaccinations came very late to them, and they still are not vaccinated. There's now also a major demand problem over there. So all of these areas need to be fixed.
So what does a 3% GDP growth in China mean for global growth?
You know, that would be a very dramatic slowing down.
That's UBS's projection at this point.
Yes, I've seen numbers like that come out. We had 4.4% in April for China's growth, but the most recent numbers that came out, certainly there is a likelihood of a downgrade.
Does that mean global recession?
3% would reduce, obviously, the global growth from 3.6% down. It's about 20%, I would say, or around 16% to show in terms of the weightage. A lot depends upon the U.S. economy and how growth there stays. And we have growth projected at around 3.3% for the U.S. economy, which is, again, a very healthy number compared to normal years for the U.S.